Today, investors are digesting a batch of economic data: home builders' confidence, factory inflation with a focus on weekly unemployment claims. Comments by Fed's policymakers and corporate news also serve as pieces in the puzzle. InstaForex analysts have evaluated the fundamental picture today. A sharp increase in retail sales again made investors revise risks and reassess fears. On a Wednesday, investors dispelled recession fears. As a result, the benchmark stock indexes closed in the green. The Dow Jones shed a modest 0.11%. The Nasdaq extended its growth and closed 0.92% up. The S&P 500 climbed by 0.28% to close at 4,147 points. The major stock indexes traded quietly in the pre-market. Futures on the stock indexes drifted lower. Bearing in mind the busy economic calendar, the S&P 500 is expected to trade within the border from 4,070 points to 4,140 points. Stronger than expected retail sales cemented investors' faith in the resilience in the U.S. economy. At the same time, growth of Wall Street indexes was subdued by the fact that the healthy economy gives leverage to the U.S. Fed on the path to aggressive tightening. On a Wednesday, the U.S. Commerce Department reported that retail sales jumped by 3% in January, much stronger than the expected 1.8% growth. A day earlier, investors found out that consumer inflation had accelerated in the United States in January. This increased expectations that the official funds rate could rise to the target range of 5 and 5.25% this year. American consumers mainly account for economic growth, hence robust consumer activity at the beginning of the year dispelled recession fears. In a light of beyond retail sales, JP Morgan doubled its GDP forecast to 2% on year for the first quarter. It means a minor decline from the 2.9% economic growth in the final quarter last year. Goldman Sachs upgraded its forecast by 0.6% to 1.4%. Apart from a strong consumption, industrial production also rose by 1% in January. Besides, surveys revealed a notable improvement in the business conditions in the state of New York in February. On the corporate front, U.S. traded shares of a Taiwan semiconductor manufacturing car tumbled by 5.3% after Berkshire Hathaway, run by Warren Buffett, cut its stake in the chip factory. Airbnb shares surged by more than 13% after the company reported higher than expected financial results amid high demand for trips. Shares of Devon Energy slumped by 10% after quarterly profits of the shale oil driller fell short of expectations due to severe frost in the United States and higher corporate spending. Shares of Apple, Alphabet, Amazon and Tesla rose by 1.4% and 2.4%, which pushed the Nasdaq and the S&P 500 up. 9 from the 11 sectors in the S&P 500 gained ground. Amid a recovery in the bullish stocks battered during the protracted bear trend, the S&P 500 has rebounded by 8% this year, and the Nasdaq has jumped by 15%. The season of quarterly reports was better than expected and inspired cautious optimism. More than half of the companies in the S&P 500 reported their corporate earnings. Almost 70% of them surpassed expectations. A batch of economic data released today gives food for thought. Building permits looked a 0.1% uptick from a month ago to stand at 1.3 million in January. It's almost the lowest reading since May 2020, and the actual score undershot the consensus of a 1.35 million. Producer prices in the United States rose by 0.7% in March in January, faster than the expected 0.4% increase. The reading indicates the fastest acceleration in the last 7 months. Meanwhile, the manufacturing index by the Philadelphia Fed plummeted to minus 24.3 points in February from a minus 8.9 in January. Analysts had projected a modest growth to minus 7.4 points. The manufacturing activity has been declining for 6 months straight and reached the lowest score since May 2020. The labor market again disappointed the stock market with its resilience. The forecast for 200,000 initial unemployment claims did not come true. The number of first-time jobless claims increased by 194,000 last week, 1,000 fewer than in the previous week, and 6,000 lower than expected. The busy economic calendar will be complemented with the remarks by Fed's policymakers. Lisa Cook, James Bullard, and Loretta Mester are due to speak tonight. The US dollar index shed 0.1% to 103.80, having notched a 6-week high at 104.11 yesterday. The greenback was wound down by investors' revision of the US economic prospects, but with the fresh economic data, the US dollar index recouped losses. The intraday Canada is seen between 103.50 and 104.50. The US currency slipped yesterday because a series of upbeat economic data reinforced confidence in a stronger than expected economic growth, even though the US Fed is poised for further sharp rate hikes. Now, investors are trying to puzzle out whether the economy will stay afloat amid higher than expected interest rates. The median forecast suggests that the ultimate level for the funds rate at 5.25%. Some experts foresee a high level of 5.5%. Strong fundamentals are likely to assure the US Fed to stick to its hawkish rhetoric, so the outlook for the US currency is bullish. The Canadian dollar is trading mainly flat today. The USD card pay is hovering at around 1.3426, having climbed by 0.26%. The instrument is expected to trade within the borders of 1.3380 and 1.3470. The loonie today is sensitive to oil prices and the firm US dollar and the speech of Tiff Macklem. The Bank of Canada governor will deliver a speech after a Senate committee called yesterday for greater parliamentary oversight of the Bank of Canada and more transparency from the central bank. As for the oil market, crude prices are trading in a narrow range because hopes for a demand recovery in China and expanding US inventories offset each other. Brent crude futures set at 0.38% to trade at $85.68 a barrel, and WTI futures grew by 0.35%. Brent grade has got stuck in the range of $80 to $90 for the last 6 weeks, and WTI has been trapped between $72 and $83 since December. The International Energy Agency reported yesterday that China would account for almost half of the growth in the global oil demand this year, and this could be bullish for the oil prices, but expanding crude stocks in the United States push oil prices down. The crypto market is overwhelmed by renewed faith in digital assets. Bitcoin has rebounded by 11 sectors since yesterday, and the trading volume stands at $37 billion in the last 24 hours. The token is extended its advance intraday, having added 1.5%. The price is trading at about $24,500. The crypto market cheered positive news from Hong Kong. The Asian financial hub announced that it would welcome crypto exchanges and investors aiming to become the leading crypto hub in the Pacific region. From June this year, selling and exchange of a cryptocurrency will be legal to all residents of Hong Kong, including mainland China. From a technical point, Bitcoin has recently surpassed resistance of $24,300. If the token can settle above $24,500, it will be able to climb to $25,200. Otherwise, the crypto is running the risk of slipping to $23,700. InstaForex team wishes you good luck in trading and see you tomorrow.